Bitcoin is an emergent phenomenon, which means that there's not a person mandating or telling people what to do. There's a hive mind that's surfacing good ideas built on top of hard work. And those ideas end up winning in a sort of a soft marketplace environment, right? If you think of it as sort of the Twitter sphere plus all of the different BitDev meetups, plus all of the different developers, plus all of the different grants that get written to those developers. If that's sort of the soft ecosystem of idea marketplace in Bitcoin, the good ideas have been winning. In my opinion, and this sort of emergent phenomenon continues to be self-perpetuating.
Welcome to the Builders in Bitcoin podcast, a podcast about the people who bring Bitcoin to life. I'm your host, Rod, and I go by the handle BitKite on Twitter. I had the immense pleasure of sitting down with my friend Harry Sudock, VP of Strategy at Bitcoin mining firm Griid, a company building out operations in the great state of Tennessee, among other locales. In this episode, we discuss and dig into what the heck is going on in the mining world, why proof of work is important, new developments, specifically Stratum V2, and how Lightning and mining can work hand in hand, and a lot more. I enjoyed and learned a lot from this conversation, and I hope you will too. So let's just jump right in. Harry Sudock, how the heck are you?
It's great to be back in Nashville.
Yeah, man, it's seriously great to see you. Great to be sitting across from you. Heck, it's even great to be sitting across from a fellow Tennessee Bitcoin miner.
The great state of Tennessee has been kind to us over the years.
Like, how did you, by the way, I mean, we got a number of things to kind of get into, but, with Griid, with a number of selfish questions, because what I do with this Builders in Bitcoin podcast, a podcast about the people who bring Bitcoin to life, you are squarely one of those people, is I get to spend 60 minutes and selfishly ask the questions I want to ask. But even before we go through some of these questions, like how the heck did you guys at Griid even identify Tennessee as an opportunity?
Relationships, like any good business, it happens between two people to start. And so we had a great relationship with one of the executives at a Tennessee utility board who had been part of recruiting another Bitcoin miner and got to know us really well. And it's sort of this age-old, thing in mining, which is, so, the big run-up in 2017 into 2018 happens. And everybody and their mother is looking for, minimum 100 megawatts or we can't have a conversation. And little old Griid showed up to that conversation when Bitcoin was at, 14,000 or something and said, well, we'd like 5. And then Bitcoin goes to 3,000. Nobody's asking for 100, but we're still asking for 5. And so we had a great opportunity to demonstrate some credibility and some long-term thinking.
I absolutely love that. One of the things is you're spending your time, capital, and reputation all in on Bitcoin, and specifically Bitcoin mining. And if anyone has a conversation with you, the breadth of knowledge you have across the entire sphere of not only Bitcoin mining, but Bitcoin in general is fascinating. So I am curious how I would say you chose Bitcoin mining because you had probably a number of opportunities to do a number of different things. But why get into Bitcoin mining?
So I think that Bitcoin mining is so exciting because Bitcoin itself is exciting for a number of reasons. Number one is I see Bitcoin as sort of the reintroduction of like the laws of physics into the monetary sphere. And so for a long time, up was down and down was up and gravity didn't exist. And, like some other consensus mechanisms, we get to build a hypothetical world and that's how we resolve things. And what Bitcoin says is no, it's sort of the ultimate tether to reality. And I see Bitcoin mining as an extension of that perspective because it sort of forces you directly into a relationship with the laws of business physics, which is profit and loss, CapEx, OpEx, EBITDA, and everything kind of that falls into a net income bucket. So it really returns you away from, the WeWork community adjusted EBITDA, thesis, and returns you much more closely to, how much did you spend on power? How much Bitcoin did you generate? And what are your other expenses? And so it's a powerful center of mass to gather around. And so in the same way that Bitcoin, returns us back into, it wakes us from our fever dream, I find that Bitcoin mining has a similar effect in another arena.
Totally. And you touched on consensus mechanisms, which I think is a good segue at a high level, because the debate is now pretty happening at the state level, federal level. It's going to happen. The conversation, not debate, is going to happen at Thanksgiving Day dinner table around, hey, what's the difference between why is proof of work important versus these other consensus mechanisms like a proof of stake and so on. I'm curious from your perspective, is there like a simple Harry Sudock way of explaining why proof of work is the best?
So proof of work is just fundamentally fair. So it's important to understand sort of what is the purpose of consensus on a deeper level, which gets at you very quickly to what's the purpose of a blockchain, or what is a blockchain. And you'll hear from time to time that blockchain is just a database, which is true. And there's really 4 things you can do to a database. You can read from it, you can write to it, you can change something, or you can delete something. And what the Bitcoin blockchain database is designed to do is to let you do only the first 2. You can only write or read. You can't change or delete. And so, that gets you to sort of what is the purpose for a software like that. And the purpose is basically just to create, other buzzwords you'll hear, distributed ledgers. And so what is the purpose of a distributed ledger? It's just to record the chronological sequence of account balances. And so when you think about what is the power in double entry, or I guess triple entry bookkeeping, like the value in that is you get to know the current number with a very high degree of accuracy, and I'm going to use the T word, but sort of trustworthiness. And so the difference between proof of work and proof of stake is like, does the current account balance get decided by a group of insiders, or does the current account balance get decided by a blind taste test done so on the merits and done so in a game theoretically robust way?
This is, we were driving over here, and we were talking about this is going to be your 4th meetup tonight that you're participating in. And when, if the folks that are listening have or have not, or if they have not been to a meetup where Harry is a presenter, he'll go off and go off on a quick little Harry tangent, and then the room will just be silent, and then there'll be like a good 1 to 2 second pregnant pause. So this is one of those. So well done there. All right, now let's go to some of my selfish questions, which, because I'm a Bitcoin miner, and I'm going to ask a very broad, general question. What the heck is happening in the Bitcoin mining world? And I'll maybe give you a little bit of a tee up, which is we're seeing, and where you can comment and where you can't. There's all these publicly traded mining companies, and maybe potentially some privately traded companies that may not be in the best shape. Like, let's go back 12 months ago, where it's actually Thanksgiving, 12 months ago. We're at like some 60K Bitcoin price, hash rate. I don't even know what the total hash rate was, maybe 100, 120. And so we were squarely in the really good quadrant of my 4 quadrants of Bitcoin mining. There's 3 that are good, one the batty one, and we're in the batty one where total exahash is going up and price is going down.
There's a Z-axis.
There's a Z-axis?
Yeah, so you actually need to do...
Don't big brain me real quick.
No, it's going to be awesome.
Okay.
Just trust me.
Okay.
So the Z-axis is power cost.
Okay.
So you live in a 3-dimensional plot of price up and down, hash left and right, and then power price is your z-axis. So you could even be in an environment where power price goes up a lot,
yeah.
price goes up a lot, and hash rate goes up a lot. That's worse for you.
Well, okay. So just playing this out, if I have a fixed PPA or power purchase agreement,
Then power price isn't going to move.
exactly. Okay.
Yeah.
So, and that's where, again, this is like, please nobody meme this, because this, that bell curve meme of like the person that's a moron, which that's me. And then the bell curve, like all the other like blue checks up in the middle. And then there's Harry on the other side, the Jedi master. Yeah. And I will say this, going back to the whole multi-level game, I think a lot of these folks really, they got, let me make sure I choose my words correctly. Like, greedy may be the right word, or they were so bullish that they lost sight of the discipline and the unit economics around how to go back. Going back to your first point that you made, really the discipline around running a profitable business.
So there's really just sort of one mistake that got made, and it got made in a lot of different places in a lot of different ways. And the mistake that got made, I don't know. You could get this wrong a lot of different ways, right?
Totally.
Like,
but in general,
in general. But what happened is people bought ASICs at too high a price, and so if you bought an ASIC, and for for the listeners, like the way you quote an ASIC is on a price per terahash basis, and so at the height of the bull run, you were seeing ASICs trade for north of $100 a terahash.
And just a quick point there is not only were they not taking possession of those ASICs, they were buying futures on those. And those delivery of those were at 12 months, or it's probably 6 to 12 months in advance.
Exactly. So, so you're buying something that if you could get it quoted today is down, I don't know, 80 to 90%.
And you're getting delivery now.
And now you're getting delivery now.
And by the way, you're paying, and sorry to cut you off, but you're paying probably 50 to 75% upfront, and then making installment payments while the price of Bitcoin is going down.
So, now imagine that you raised debt to do that, right? So now the collateral pool that you borrowed the money against is worth 10 cents on the dollar, and the revenues that you expected to generate are similarly much, much smaller. And we end up in an energy environment. So some people definitely have fixed price PPAs and had the discipline on the power side. Not everybody did. Or maybe you couldn't sign your PPA till the machines got delivered. And so now all of a sudden the price of natural gas went from, whatever, $1, and these are just to kind of gross up the order of magnitude, from $1 to $4. And so now the cost structure has quadrupled. The revenue has come down 80 to 90%. The value of what you've purchased has come down 80 to 90%, but you still owe the loan balance. You're upside down, 4 different ways. And so, so that's what we're seeing now is that, if you screwed up your cost basis of the machine, your cost of capital can then choke you, and the economics that your business is supposed to deliver never get there.
Yep.
And we're seeing a lot of that.
Yeah, Austin Storms, who I think works now at Galaxy, at the meetup in May, nailed it. He's like, it's the cost of capital, or your expenditures on buying ASICs stupid, basically is what he said. Just your entry point in buying those ASICs and then delivery to plug in is key. One thing you just taught me, which I didn't realize in my whole kind of model, is, why would a power or energy producer give you a fixed rate if you're not using that rate at that given time? And then they wouldn't promise you a future rate because of the volatility in just the market. And then the other side of this is the amount of infrastructure that has been being built up over the last 6 to 12 months that's finally being delivered now. At your point, a much higher cost per kilowatt. Wow. Okay.
And then it becomes, for a lot of folks out there, which we've seen very publicly, like these are incredibly, incredibly challenging environments. And and let's just take the sort of the most generous, hypothetical view, which is you signed a fixed price PPA in, probably, Q4 of last year. You avoid this whole sort of Ukraine precipitated situation. You lock in an order for machines at, I don't know, $60 or $70 a terahash, which at the time would have been really strong pricing. And you do so all with equity. right? You don't raise any debt, so you're unlevered. It's still going to take you an enormous amount of time to ROI those machines because your cost basis is so high. So even if you get everything right, your business is solvent, the unit economics work, the amount of time that it takes to generate a positive return on the equity invested is still really, really tough.
Yeah, but I will say on the payback period versus other investments,
Oh, it's still very good.
it's still very good. And the a way you can treat it from an accounting perspective, and then you talk to your accountant in terms of like what um, uh, the way you can do what's called accelerated bonus depreciation, I believe, is really interesting as well. So like when you're looking at like a single family rental home investment versus a Bitcoin mining investment, you're pay some folks that don't know the game, but just look at it as just a straight real estate play. Look at, oh, my payback period is, anywhere from 24 months. Oh, worst case is, let's say well, not worst case, but because it could be a lot worse, but let's say 5 to 7 years. Oh yeah, I'll still do that, and I get a tax treatment there.
Totally. Yeah, I think if you look at the opportunities to invest in generating revenues out of Bitcoin mining, Bitcoin mining looks very different than a traditional real estate play for sure. And I don't have any background in being able to speak to
Sure.
to the real estate side of that. But I think that it's just another opportunity to take like a lot of caution in this stuff, whether you're an operator building and running a company, whether you're writing a check to a private company, whether you're investing in a public company, like all of the lessons are like, you're not as smart on your best day and you're not as dumb as your worst day. And nobody ever lost a lot of sleep for caution and thoughtful analysis.
Totally. But for this segment, we're going to throw caution to the wind. And we're going to, this is also not financial advice, but so if somebody is like, I really want to get into Bitcoin mining and invest in the space. And I'll tee this up in the sense that there's, a single S9, although it's probably not profitable where you are, depending on your power cost, to mining off grid, to all the way to investing in the public, in a publicly traded mining company. How would you kind of coach folks or what would your criteria be when you're looking at a investment opportunity without giving any financial advice?
Yeah, I mean, if I were to assess this for number one is everybody's situation is different and everybody has different objectives. For me, the easiest way to go about doing it is spend the least amount of money, buy a used S9 and plug it in and get an education. Don't expect to make a penny. And just learn how the Bitcoin network functions from a proof of work consensus perspective.
Please do that. I actually have done that with the S9 and the MicroBT M3, I want to say, even though that's a 240 volt.
That's a dinosaur. That's awesome.
So shout out to Adam, Denver Bitcoin. He sold me one at the top, but I still love you. No, but honestly, like, okay, I'm going to tell a quick story, which makes me look like a moron, which are many of those stories. I get the miner and then I plug it into a wall.
Oh, dude.
And like me and my buddy are like, all right, why is it not humming? We're like, what's going on?
You got 120 volt, baby.
Yeah.
Doesn't take that.
So then I hired an electrician, which again, pro tip, always hire an electrician to do any electrical work as specific as it relates to Bitcoin mining.
Or your house in general.
Yeah, exactly. You go look at Eco and go look at a lot of other folks that try this on their own, and they will support that.
Let me just to give your listeners a sense of what you did. You poured diesel, in a normal car.
That 100%. And but to your point, like touching the stove or getting your fingernails dirty, opening up the miner, cleaning the boards, doing all this stuff, understanding why is there a Ethernet connection here? Why is a fan going out this way versus all of this is super educational because then you're like, oh, like how would you rack and stack these in a container out in the middle of nowhere? Well, don't you need internet? Or don't you need power? Or all of these questions that you now have some cursory understanding of an individual miner that you can go up. I couldn't agree more with that point you just made.
Yeah, to me, that's the thing that like if you have $200 laying around, it's worth it.
Yep.
And expect nothing in return for it, but it's just a way to learn more deeply about Bitcoin. And it it's an homage back to if you read the Steve Jobs biography and he and Wozniak when they first got involved in the scene, like they would go to like homebrew meetups. Let me know when this starts to sound familiar.
Yeah.
You get 75 nerdy people together in a room to bring their homemade computers and play with them. It's pretty reminiscent of getting 75 nerdy people together to talk about weird magic internet money and what it means for society. And at the end of the day, like, the computer changed the world. Putting the power of the PC in people's hands unlocked human flourishing. And so, like I use this all the time when people tell me that, Bitcoin's too weird or it doesn't make sense or, people don't change. Go look at the top 10 companies in the S&P 500 from 1990, and then go look at the top 10 companies in the S&P 500 today.
Yep.
By market cap. It is all internet companies and like two others.
Yep.
0 internet companies in 1990.
Yeah.
Google, Apple, Facebook, Microsoft, the biggest companies in the world. They touch the most people's lives. They generate the most, productive output with the products that they deliver. Maybe not Facebook. But the world around us changes and human beings reorganize themselves around better ideas very, very, very quickly. And so when a better idea gets propagated across a large group of people, it will reveal itself. And I think the behavior we've seen on the Bitcoin network and the behavior that we've seen across the Bitcoin community has made that very obvious once again. And we're just getting started.
We're just getting started. And let's say in the next 20 years, Griid will be up there in that top 10 with people. I'm going to boost your ego because I love you. Like seriously, people like talented like you guys being assembled, nimble, focused teams that are so passionate can change the freaking world. I fundamentally believe that.
I hope that we can do a great job working hard. I have no perspective on where we'll end up or what we'll do or if anything like that. I just want to work hard on Bitcoin.
So now let's go into the technical side because there's a lot happening. And I will say, to your point, Bitcoin is so deep and so wide that I have a decent understanding of Bitcoin mining, but I'm learning every single day. For example, like Lightning. I know a bit about Lightning. I mean, I run my own node, I open some channels, but I feel like I have just the most top surface level understanding of Lightning. 2 questions. First, around Stratum V2. From a Harry Sudock perspective, can you explain Stratum V2? Why is that important, and why should people care?
Yeah, so Stratum V2 is important for a number of reasons. The first is just that Stratum V1 isn't very well encrypted. So you're just leaking like plain text over the internet in Stratum V1.
So can you give a specific case of like how that's?
The way that the mining operations share the blocks that they're guessing, essentially is through the Stratum protocol, the Stratum server. So, you're basically just pushing data to a server. The server gets validated or approved, by the pool operator, and then either confirmed or not. The stream of information between the miner and the pool is just like not encrypted. It's just bad. You don't want to have that. So, so first and foremost, Stratum V2, adds a lot of data privacy to Bitcoin mining, right? Like none of this affects your node. None of this affects sending a transaction or anything. It's purely the hashing and the mining piece of the software stack that this affects. The other is that, the way that it works right now is that you can solve the block, but the solution set that you offer is running against a cluster of transactions that you as the miner have not selected. So there's really sort of 2 mechanisms in the way that a block gets assembled and then guessed against, basically. So let's just say, block just got propagated and found, and now we're on to the next one. essentially what happens is that the pool sends you a bunch of templated blocks with the transactions included, and your job is to guess, the solution quickly, and then send it back to them, and then validate it as quickly as you can. What Stratum V2 offers is basically that initial clustering of transactions and assembling of the block. The individual miners contributing the hash rate do that piece of it, even though there's still the same coordination layer happening on the pool from a aggregation of hash and distribution of pro rata revenues. So it creates, the decentralization of transaction inclusion migrates from the pool level to the individual miner level, which is positive from a decentralization perspective.
And then how do you see adoption rolling out? Like one of the things I'm a little bit nervous about is like, for example, like Taproot. Everyone was talking about Taproot, how this is great and it's going to unlock or potentially unlock a number of other use cases within Bitcoin. And then now I think Brains is right now maybe using Stratum V2, if I'm correct or not, or maybe in a test environment still. How does a rollout of Stratum V2 across all the mining pools play out in your opinion?
The pools are super incentivized to do this, right? The pools don't want the responsibility of transaction inclusion. And so they're going to say, if you want to mine on,
XYZ.
Yeah, exactly. XYZ pool, upgrade to Stratum V2.
Yep.
And so they're able to push that change towards the miners in a meaningful way. And then, everybody will get on board and it'll get easy. Who's arguing against SegWit anymore, right? Nobody is. So once these get adopted and rolled out broadly, like the ability to use a SegWit address is just a Bitcoin address.
Totally. And just like anything, it's time. I got to lower my time preference rather than being like, oh, we got this the shiny new. I shouldn't say shiny new thing. Like this great new thing. Let's implement it, everybody, right now. It's like no, just the incentives are there for it to work in an adversarial environment, and it should work out the way.
Exactly. It's I use this term like Bitcoin is an emergent phenomenon, which means that there's not a person mandating or telling people what to do. There's a hive mind that's surfacing good ideas built on top of hard work, and those ideas end up winning in a sort of a soft marketplace environment, right? If you think of it as sort of the Twitter sphere plus all of the different BitDev meetups, plus all of the different developers, plus all of the different grants that get written to those developers. If that's sort of the soft ecosystem of idea marketplace in Bitcoin, the good ideas have been winning, in my opinion, and this sort of emergent phenomenon continues to be self-perpetuating in a way that maybe a token or a coin that has a big foundation who gets to tell everybody what code to write wouldn't benefit so much from in other ways. And so that's why I hear sort of all the time like we're losing developers and we're losing a step and we're not building enough DeFi on Bitcoin. There will be some DeFi on Bitcoin over time, I'm sure, but it's just not. To me, it's like if I'm going to go buy a car, right? It's like saying, I'm going to go buy a car and the only criteria I care about are the cup holders. Give me better cup holders, or don't buy this car. Like, it's crazy. Like, what is the engine like? Is it safe? Is it reliable? Does it have good gas mileage? Like, those are the criteria that I care about. But then there's like other voices just screaming at you. What about the cup holders?
Yeah.
And that's kind of what it feels like with Bitcoin, which is I get to have sovereign, non-state, hard money that operates on a decentralized basis with no third parties. I get to send it anywhere in the world without having to interact with anything other than the protocol. And you're telling me that like I'm losing like 150 core devs or 150 app developers because they can't write themselves a foundation check and print new money? Like that's the feature I'm missing. It's all cup holders, right?
And I would call that a very strong feature because it weeds out the folks that are here, for the right reasons. And to your cup holder analogy, it's a nice little layer 2 or layer 3 because for your supersized drink, you could buy that accessory and put it into the cup holder and be able to support your 24 ounce or like 2 liter cola that you need to guzzle down.
Exactly. All of the nice to haves can get jerry rigged. All of the must haves need to be built in from the ground up in the DNA at every cellular level. Because if you don't build it that way, you just introduce systemic risk without understanding the consequences. Because this is what happens on a long time scale project is you make a design mistake or a compromise early that doesn't actually look like it's punishing you for an incredibly long period of time. And then when you get into the out years of the project, it becomes catastrophic systemic risk. And you have to be disciplined from those early days, or you just introduce that to it. And it drives me nuts when people are not sort of when it's sort of a false. It's like false equivalence.
Yeah, and this is probably a good segue, which not saying lightning is reckless, but lightning is still in its quote unquote infancy, even though it's still like we're able to use it. Heck, we bought, cups of coffee here at the park using lightning, and it's so it feels magical to me. But over the last a couple days, even the last month, there's been some holes in some a lightning implementation. And not to get specific in which one's a good one, which one's not, or why, and so on. But to your point, we're still early on, but at the layer one or the base layer, the fundamental layer of that car to move from point A to point B, you just want to make sure it gets there safe, sound, and reliably. And then add on whatever customizations or whatever things you want to experiment within the car, to each their own.
Totally, and that's the point is that like I get to opt into Lightning.
Yeah.
Right? Nobody is telling me this is how I have to use my Bitcoin. It is one way to use my Bitcoin that I can choose to participate in or not. It may be something that I'm not comfortable with the risks in, or I totally am comfortable with the risks in it. But I get to make that choice, and I get to make that choice with an extremely high degree of certainty around what my Bitcoin is before I make that choice.
I love that. Let's stay on Lightning because you touched on this at a meetup maybe in May, but then I also saw somebody's Twitter bio that they were working at a big mining pool and they were focused on Lightning. So from your perspective, how does Lightning work within the Bitcoin mining ecosystem, or how can it work within that ecosystem?
Yeah, so I think like right now, one conversation is how decentralized should hash rate be? And I think there's lots of ways to come at that, and at what level should the hash rate be decentralized? And I'm very hesitant to use the word should, but I think this is one example of a friction point, which is if I'm running one machine in my garage, it might take me a really long time to accumulate enough Bitcoin to get a payout. So one way to remove counterparty risk and discomfort there for a home miner would be to stream their hash to the pool in exchange for sats over a Lightning channel. Mm. And so you could just stream hash the way you'd stream a podcast over Lightning.
What? Okay.
And you remove all of the counterparty risk because you're getting paid in as close to real time for your hash as you can get.
So you're not waiting for and by the way, keep me honest here. So there's like a Brains, for example, and they're on a PFS.
They're on a pay
fair share.
So there's like a bunch of methodologies for how pools calculate your revenue.
Yep.
I'm going to get it wrong, and I'm going to get the acronyms wrong, so forgive me in advance. But there's essentially sort of two schools of thought.
Yep.
One is the pool finds a block. Everybody gets their proportional share of the revenue of the fee plus the subsidy. The other school of thought is we are going to pay you for your hash rate over time, regardless of how many blocks we find. And so you have predictability in your revenue where, like, let's just say you're the first kind. It might take the pool a month to normalize the probabilities of finding the amount of blocks that they're, quote unquote entitled to. And so, what if it takes 2 months? Mm-hmm. What if it takes 3 months? For some miners, they make the choice that the predictability of those cash flows and the revenues is important enough to them to choose a pool that prioritizes that feature. From the pool's perspective, it's much more balance sheet intensive. You might be up or down a lot of Bitcoin month to month because the blocks haven't caught up or the blocks are way ahead. And it requires some fancy math to figure out how to account for the fees, right? So you're doing whatever, a 2-week look back and then normalize the distribution and, all the classes that they told me to pay attention in that I probably didn't. So you're able to come up with sort of a very robust probabilistic model on how much each quote unquote share of hash rate and mining compute should generate in terms of revenue. Now, the way that payout works today is usually, and this is in both cases, that balance builds up and then either gets cleared each night or gets cleared above a certain Bitcoin balance threshold. What a potential Lightning opportunity in mining could be is that the same way that you stream sats for content, you could stream sats for hash.
That'd be so badass.
Which would just be cool. And but it has a lot of positive knock-on effects as well, which is you would be able to add a bunch of Lightning liquidity, a bunch of well-funded channels, because all those miners are incentivized to keep those channels open, right? Because you pay fees when you close a channel and reopen a channel. And so now it's a way to bootstrap a bunch of liquidity onto the Lightning Network in a fun and Bitcoin native way that doesn't require, commerce and transactions in sort of the merchant environment. And those would be longtime channel users because they have a big incentive to keep those channels open.
Totally.
So it's a cool thing that could be built. I think there's some folks who are thinking in these ways, and I similarly am not the Lightning expert. I'm just a friendly user. And so, that's stuff that I've thought about that would be cool and that other folks have thought a lot more about that I think, are probably like a 2023 project if someone's working on it.
Well, I hope you come back because that's a continued conversation that we could just spend probably an hour talking about, especially if there's a first implementation of this. I know I'd be using it and experimenting with it and so on. But we have another great meetup tonight. So this is, I mentioned this before, this is your 4th time being participating, and I can't thank you enough to participating and spending your time with the Nashville Bitcoin community.
I love it. I love every bit of it.
Man, it means so much to us. And I will say, speaking on behalf of them, thank you so much for spending time with us. Tonight's topic is Bitcoin and public policy. We have over 100 RSVPs for 2 absolute banger panels. One question I have for you, at a high level, if you're thinking about policy, and you mentioned you guys are mining here in the state of Tennessee, which is awesome. Want to do more here. And there's a lot of folks that are doing a lot of mining here in the state of Tennessee. And you guys, you mentioned you're a smaller rinky-dink company back in 2017, 2018, scrappy, and you guys are still scrappy, but getting bigger. When you think about policy and you're talking with other policy makers, maybe I'll even back up and say, I've been privy to a number of conversations being here at the park. And where Matt and I are focused on is 3 pillars for the park: community, advocacy, and development. The advocacy side is really interesting to me now because we just need, people don't know, especially on the policy side, they just don't know, like even the difference between proof of stake and proof of work, or why is Bitcoin the capital? By the way, I'm a Bitcoin capital B maximalist, and I appreciate you explaining it that way, and lowercase b reserve asset maximalist. But even in those simple ways and having the dialogue, because again, this is a feature of Bitcoin. There's no central group of people that, hey, let's go to DC and talk as part of the Bitcoin marketing team or on behalf of Bitcoin. There are all these different advocacy groups like the Bitcoin Policy Institute. There's other advocacy groups like for freedom-oriented, less regulation, like the Beacon Center here in Tennessee. And so, not to tee you up, but I'd be curious to know from your experience, are there any policies that you would, if you were in charge, you would add, edit, delete to make it more friendly for mining Bitcoin in the US and maybe even more specifically in the state of Tennessee?
Yeah, I think that the Bitcoin side of the equation is going to take care of itself, right? I think Bitcoin is property and will function. The U.S. is still the best place in the world to demonstrate property rights as an individual, and so I'm not really concerned sort of on that front. Caitlin Long might have better ideas there, but I'm sort of in the camp of the U.S. is a great place to own Bitcoin. For miners, it's all on the energy side, right? Being able to have access to lower cost power with high reliability and being part of the solution on, the back, so like and let's take a step back. Why is energy important? Low cost, high reliability energy is the backbone of modern civilization. If you look at available kilowatt hours per capita, it tracks almost 1-to-1 with things like infant mortality, longevity, nutrition, education, all the things that like matter for a good society. They're all built on the back of that energy availability.
And if you want to fact check Harry, he recommended a book to me about 8 months ago. I think it's titled Energy and Civilization.
Oh,
that you can
did you dive in?
Oh man, I'm chewing through that right now. Still. And I mean, it just supports exactly what you said, and you eloquently kind of organize it. More energy, like again, I'm going to go into the bell curve of the dumb guy, Rod, which is more energy production good, civilization go up. That's as simple as it is. So when you're reducing energy output, civilization, from a prosperity standpoint, from a living standard standpoint, goes down.
Yeah. So like, and just to put it like, because it's so egregious to me. Like the right now, and Germany's getting it. They're turning it around a little bit, but like for our Bitcoin listeners, like think of the sort of the German government over the last 3 years as like Arthur Hayes, like chasing liquidations, right? They're basically saying, I want to win an election and I'm willing to mortgage like decades of prosperity in exchange for that. And so they're just like chasing the liquidations like for the next election cycle. And it's so depressing because it's going to make everyone's life way worse. It's going to make people less safe. It's going to make people less prosperous in all manner of knock-on effect kind of ways. And so the great part about being in Tennessee is the TVA is awesome and has done a great job delivering really high uptime, really reasonably priced power to 7 states. And the way that they've been able to do that is by enormous investment in hydroelectric, in nuclear, and in natural gas. And those sort of 3 legs of the stool have built this incredible backbone of energy availability. So on the generation and the supply side, there's been a ton of success here. The next sort of opportunity is to layer on top of that more flexible and creative rate structures that come to meet Bitcoin miners where they are, which is, the great thing about Bitcoin mining is that the energy demand profile looks like nothing that has existed before. And so there really is sort of a step change innovation in how Bitcoin miners are able to purchase power. We're seeing a lot of that in Texas, and we're seeing those miners get really handsomely rewarded and are able to purchase power at incredibly competitive prices. I think that there's similar methodologies that could be applied to more regulated markets. So Texas is a completely unregulated market. In the US, there's 3 power markets. There's East, West, and Texas. And so to take some of these ideas of demand response and curtailment and the opportunity to shutter and offer the power back is going to become more and more important over time as these markets get more sophisticated, as more renewables enter the market. It's called the duck curve. Google the duck curve and you'll see it. It looks like a duck. But when the peak generation off of wind and solar hits the market versus when peak demand is looking for that power, there's a mismatch. And so as these mismatches grow more and more exacerbated based on the load profile of the generation, the need for flexible consumption is going to grow as well. And so if you're a regulator, a policymaker, a politician, a person who's interested in this stuff, just start thinking about how to match buyers and sellers of power more efficiently with more flexible structures, like and invite a Bitcoin miner to your house to talk about it, because I think that sort of the creative space got a lot bigger with the invention of proof of work and with Bitcoin, and can do so in an incredibly productive and positive way, where communities that wouldn't have access to revenues like this get access to revenues like this. A Bitcoin miner doesn't need the interstate to drive through to build their facility. They don't need 700 highly trained, specialized jobs in order to, manufacture the thing, right? There's an incredibly egalitarian opportunity here where any community that has the power can recruit the Bitcoin miner. It doesn't need to be sort of placed, this is not a rich get richer type of environment. This is a huge sort of opportunity where places can recruit a business like this and do really, really well.
And I think you nailed it with the word communities, because the communities actually become more sound and more sustainable on their own. And the big thing for me is there's purpose-driven jobs that are naturally created with Bitcoin mining. And you eloquently say it, like there's ditch diggers that talk to the dirt that that now have purpose in terms of what they're working on, to electricians, to hosting providers, to just security. Like the list goes on and on as it relates to folks contributing. So, by the way, we're going to have in attendance, it looks like folks from the TVA, the state level. Actually, both senators, representatives are going to be in the audience. And I think this is also a good segue just to tease Matt and I, along with you, Harry, and thanks again for participating in the Nashville Energy and Mining Summit in January, where it's a 2-day summit where we're really bringing 4 groups of folks together. So policymakers and investors in the audience, but in participating in deep panel discussions are those energy producers. And I'm going to save my nuclear question for you for part 2 when we eventually do this, because I know you have some thoughts there. Besides nuclear is good.
We like the isotope.
We like the long isotopes. The Simpsons. You ever watch The Simpsons?
Absolutely.
Okay, I think their mascot or the team name was Isotopes, right?
It was. We'll do a nuclear conversation in the future. I have thoughts.
Good deal. And the full spectrum of energy producers, off grid, on grid, and so on. And then the full spectrum of miners, right? From the pleb at home miners that are doing some crazy innovative stuff, to the publicly traded, scaled up miners and their operations. So if you check out our meetup page, meetup.com/Bitcoin Park, you can learn a little bit more. So Harry, I know we have a bit of a hard stop and I can go for hours. I just want to say thank you so much. Are there any closing thoughts or anything you want to leave the audience with?
Two things. The first is just that working on Bitcoin is the gift of a lifetime, right? Not everybody gets the chance to feel like their life's work meets the moment around them, and I feel incredibly fortunate and incredibly grateful to get to bring my limited skill set to something that that I wake up thinking about and I go to bed thinking about, and have it be something that I think is really going to matter. Already really matters, but will continue to. And then the second is that, and I didn't know this when I got excited about Bitcoin, is just that there is no better medicine than spending time with Bitcoiners. And so, Rod has opened Bitcoin Park, but in my mind, it's really just sort of like Bitcoin pharmacy. So I can come here and just feel better because there, the opportunity to be around, tens, if not hundreds of like-minded people, good people, who I know that the moment we strike up conversation, the quality bar has long ago been overcame. Is such a gift, and it takes a rare person to build a community like that, and to double down and double down and double down again the way Rod has. And so, I am a great beneficiary of all of that. So thank you for having me.
Thank you for the kind words. Did not expect that, so I'm a little bit lost for words. But I will say you should follow Harry on Twitter if you're not already, and we'll put this in the show notes. But Harry_Sudock, Sudock, and I'll leave you with this. And I'll thank you for being in the arena. You posted the Teddy Roosevelt quote, and I'm a big quote guy. We need more folks in the arena working it out and spending their time, capital, and reputation in this space. So thanks again for spending time with us, and couldn't be more pumped for tonight.
Awesome. Likewise, Rod. Thank you.
Hey everyone, I hope you enjoyed my conversation with Harry as much as I did. Harry's master level understanding of energy grids and mining infrastructure makes him a uniquely valuable asset to the Bitcoin ecosystem and community. I'm fortunate to call him a friend. If you're enjoying the pod and want to auto-magically stay up to date, please like and subscribe in your favorite podcasting app, and make sure auto download is on. This would also mean the world to me. Lastly, come visit us in Nashville at Bitcoin Park. The Bitcoin community here in Nashville grows stronger by the day. We hinted at a number of events, pop-ups, workshops, and meetups, and even launched Nash Bit Devs here at the park. More to come on this, especially in 2023. So if you want to be the first to know, join our meetup page at bitcoinpark.co and check the show notes for this episode for a link to the Bitcoin Park Discord server so that you can stay connected with us. Until next time.